You know what time it is. It's time for your favorite FDIC-inspired show, the Know Your Dough Show, teaching you everything you need to know about the world of finance. Today we're going to be talking about financial markets and investing. Take it away, Ava.
More specifically, we are going to discuss the basics of investment and go deep into how to research them and understand regulations to effectively invest your money.
So, we have a dilemma. We all do as a human. We want to have a large sum of capital or money, especially by the time we retire. How do we do that? That bank isn't giving us any interest, and quite frankly, I don't feel like putting in $500, taking out $500 60 years later only to realize that $500 is worth $10 in today's money. No, you need to invest. Investing is the best way to have a large sum of capital grow over time, over a certain period, particularly investing in a market. Let me explain. The way investing works is kind of like a formula. You have three things. You have your initial sum that you invest and the amount of money that you invest. That's one. You have time, and then you have the third one, which is risk. These three are the factors that form the formula for your investment return. The more you invest initially, and the more you constantly add into your investment, the more it'll grow, and the faster it'll grow, because there's more money to grow with due to compound interest. The less you put in, the less it'll grow. That's why when you want to invest for long-term growth, you want to invest as much as possible so the growth rate is higher. You also have to combine it with risk, however. A very risky investment will have high returns in the few times it works, but when it doesn't work, it's all gone. Poof. Gone from existence, not a trace. Not a trace. What does that mean? Well, it means you're not broke. But let's say you have a conservative approach. While the return will be a lot lower, you'll also be able to rely on that return. So it'll just grow slowly over time. And that third factor of time, the longer the time your money is sitting, the longer it has for compound interest to run over and over and over. And all of a sudden it's growing exponentially, and you have a lot more money than you initially put in there. This is how investments work. Think about the time, the amount of money you put in, and the risk. Combine those three and you'll get the optimal investment for what you're looking to achieve.
The best thing you can do to ensure a good investment is research. Research is key to understanding if an investment will match what you are looking for and best fits your needs and wants. So it is important that you thoroughly research beforehand and make sure that this investment is the right one for you.
There are many ways your investments can be regulated. It's common to actually ask someone to regulate them for you. This is known as a mutual fund, but you have to remember, investment advice is technically illegal to receive or give unless you are SEC certified, which is a Securities Exchange Commission. Otherwise, it can be considered examples of insider trading, etc., all kinds of legal shenanigans that really I don't want to get into because I'm nowhere near qualified to talk about that. Now, what does that mean? You have a couple options if you want to deal with investing yourself. For example, there's an index fund. What's an index fund? It's a large collection of companies put into one giant stock. The whole idea of this is you take the collective value of all those companies, and that's what the stock value rises and lowers by. So the whole idea behind this is a couple companies do bad, the rest of the companies are going to pull that stock up anyway, so you won't feel the negative impact of a couple companies starting to fail. A good example of this is the S&P 500. For example, Warren Buffett, famous billionaire, said, if you want to put your money somewhere and just let it grow without knowing anything about money, put it in an index fund and wait a couple years, 30 years, 40 years. Next thing you know, you have a strong retirement account because you put a lot of money in that index fund and it just grew over time. You also have the option to invest in stocks individually. This is a riskier but higher return option, and you also have full control over what kind of stocks you want to put in. Compare that to the S&P 500, which is just the 500 of some of the largest corporations in America, and compare that to investing in individual stocks. Let's say I only want to invest in aviation. Then I'd only invest in Boeing, Lockheed Martin, Northrop Grumman, etc., instead of investing in a multitude of companies I have no interest or expertise in. This allows you to actually make sound financial decisions on personal investments on a one-to-one basis without actually having full knowledge of the complete market. So really the approach is all up to you. You have the mutual funds where you don't even have to worry about it. You have the index funds where you just kind of put your money where all the companies are, or you have individual funds where you pay close attention every single day and you might or might not get lower or higher returns.
An understanding of business and economic cycles is key for investors, as it allows them to better predict patterns for stocks and businesses in the future. By understanding these cycles, you can better time an investment, such as at the bottom of the economic cycle, and see significantly better returns of a smaller investment, for example, when the cycle goes back to equilibrium. What goes up must come down, and what goes down will almost always bounce back up. And trying to buy at the bounce and sell at the peak is one of the key aspects of investment. We hope you have a strong understanding of the basics of investments, how to research them, and the regulations to effectively invest your money.
Thank you so much for coming here today to join us and watch this video on investing. Please make sure to like, comment, subscribe, send us an email, hit that notification button, smash that like button, keep hitting replay to get those views up, whatever it takes. I'm Landon.
And I'm Ava.
And we're here to make sure that you know your dough.